For the first time in Bitcoin's history, we've seen 9 consecutive weekly declines. And so when we first looked at that, I think the tendency was to say, uh-oh, that's really negative. My question to the team was, well, could it be oversold? Could the rubber band be stretching here? Or is there something wrong? And we don't know the answer to that, so we put that in neutral category, and you'll see we'll put each of these metrics in bullish, bearish, or neutral. But we do know what happened in the last month is that Terra, the blockchain Terra, blew up, and Luna is worthless. I think I'm correct in saying that the market cap of that ecosystem at one point was around $60 billion, with a lot of well-known advocates for it. I was surprised because algorithmic stablecoins don't make any sense to me. I have a background in economics, and I think you need the backing of something in order to have a stablecoin, and this did not. And so it didn't surprise me to see the number, I think this is the number of Luna outstanding, go from, in the span of a week, something like 350 million to 6.5 trillion. And I think it maybe even got to 20 trillion. So that's hyperinflation. There was nothing backing it. And I can say we would never have touched it. Nonetheless, that turmoil, that it didn't create a systemic risk. And we've been paying attention to the other stable coins out there. Are they going to so-called break the buck? So that expression came about after the reserve fund, a money market fund during 08-09, broke the buck. People holding that money market fund were going to get less than $1 back for every dollar they put in. And of course, the Fed had to come and rescue that fund, because that was going to become systemic in the 08-09 meltdown. But just the idea that such an instrument could exist has probably given the Fed more ammunition, not the Fed, the regulators more ammunition to regulate in this space. And the Fed could be involved in the regulation. There was about $3 billion of Bitcoin used as collateral. They had been building it up in the last month or so. And so we believe all of that was disgorged at one point. That's one reason that the Bitcoin has gone down from, in the last month, just from 40,000 to 30,000. Another reason is the high correlation with the NASDAQ. Now, interestingly, in the last week or so, that correlation broke down a bit. The NASDAQ had a few really good days. Bitcoin did not. So there's something else bothering Bitcoin. It is down 57% since its high at almost $70,000 in November. Its 200-week moving average is 22,000. So today we're at 29,000, I think. Its 200-week moving average is at 22,000 and rising. Now, the reason that particular number is interesting to us is we initiated our first Bitcoin position at, back then it was the 200-week moving average. It was in the $225 to $250 range. So we've come a long way since then, but that has proven to be a nice support. So that's also interesting. A couple of other points I'll just highlight, and you can see in the report. It appears that the short-term holders, and you can see everything in this ecosystem. The transparency is amazing. It does appear, according to our metrics, that short-term holders have capitulated. That's very good news in terms of putting in a bottom. Long-term holders are at an all-time high at 65.7%. That means they've been holding Bitcoin for at least a year. We've got some very strong holders or hodlers here. That's also very good news, although we might see some long-term holder capitulation to mark the bottom. And then the last metric that I'll feature, there are many more, is that the futures, Bitcoin futures, are selling at a discount to spot Bitcoin. And during those times, we expect volatility. Now, we don't know if it's up or down, but you can see from other metrics in the piece that our thinking right now, or our judgment call, is the next big bout of volatility in Bitcoin will be to the upside. Nonetheless, we are on guard. The Terra disaster. It was a fiasco for crypto, I think, in terms of raising or giving regulators even more incentive and reason to come in and regulate a little bit more, with more of a heavy hand than we would anticipate. So take a look at the report. It will be coming out monthly. There'll be a little summary of what we think are the most important developments during the past month. And, again, Bitcoin, blockchain technology is very transparent. Ark Invest is very transparent. And we will be out there, giving you our point of view and explaining, what we believe is going on every step of the way. We give our research away so you understand why we're invested, how we're invested. We will be putting up in the next 10 days another of our models. We're open sourcing another model, so stay tuned for that. We intend to model certainly our top 10 stocks over time and put those models on GitHub so that you will be able to, if you disagree with our assumptions, modify them and get a sense of where the price target would be 5 years out if your assumptions are correct. And another reason we're putting these models out is because we feel that these stocks are not being covered as effectively as they might be. All we do is disruptive innovation. All of our investing and research is centered on it. And so we want to offer it up to help enlighten people who might like to know how we think the world is changing. We certainly put a lot of the top-down work out there. Now we're putting out more of the bottom-up work. So you can see the intensity behind our analysis, not just the top-down analysis, but the bottom-up analysis. And you can also see, and this is so important, how taking a 5-year point of view